Hey everyone, my name is Chris. I'm the new contributor to this channel, especially for topics related to stocks. Today we are going to talk about what you could do to prepare for the next market correction. As you know, the last few weeks has been hard. If you are a tech-heavy investor like myself, the NASDAQ was down 10% from its all-time high. At the same time, S&P was down 4%. And for myself, it was even further down. I had 80 plus thousands unrealized profit at one point, and then it was down to 14,000. It has recovered a bit now to around 44,000, but still it was hard to see the portfolio going down so quickly, and you keep telling yourself to stop checking your portfolio, but you keep checking anyway because you want to know where they are, and you wish you had more money to buy the dip, but you didn't have one. So I just want to share a couple of things that I learned and I plan to do to prepare for the next correction. So the first one is to first always have cash position, 5 to 20% of your portfolio, depending on where do you think the market is going. I always don't want to buy stock using margin or borrowing money to buy shares unless you know what you're doing. And remember, this is money that you could put aside that you don't need immediately, and investing it long term will allow it to compound and grow in value for you. And it's always okay to sell shares from time to time, but I would like to sell them while they're still up, preferably before or sometime after the correction, after it has recovered. And remember to only sell shares if you have a good reason for it. So I think if you don't have any interest to follow them anymore, or if your investment thesis is no longer valid, like the reason why you bought them in the first place, then it is always a valid reason, and then it's a good way to also to build your cash position so that you could build the better prospect stocks when it's going down. The second one is to have your watch list in priority order ready. So when the correction happens, everyone tends to be emotional. They tend to act at impulse, follow what other people are doing, and maybe influenced by the short-term news circulating around. So having a stock list in priority order will prepare you to make a better decision, because you will buy a stock that you really want to keep for a long term. The third one is to buy the dip strategically. So the market was down initially around 16th of February, and then if you buy the dip then, and if you buy a like a large allocation, and then it keeps going down and down and down until March 4th. So if you have used up your cash to buy the week before, then you will miss the opportunity to buy later. So always buy strategically, not all at once. I always like to think to buy in fourth, so 25% initially, and if it's going up, then great. Otherwise you can average down and buy like at a more discount price. Also, when buying the dip, remember that sometimes people have price anchoring bias. We tend to watch the stock price day to day, and then sometimes we forget that the stock price has going down substantially, but it's only going to the price it was before, 1 or 2 months before. So it's always good to zoom out on the stock chart and see how far really the dip is, and if it's really like a good buying opportunity, and you can adjust the allocation, how many to buy depending on that, and also depending on if you already have the stock in your portfolio. So if it's already a large position or a full position in your portfolio, maybe you just add a bit, because I wouldn't want to have a single stock more than 10%. Well, I do have one stock more than 25%, just because it's a stock that I get from the company where I work for, but I do want to diversify from them over time. But buying during the dip, if it's a new position, it's always good. I think it's always good to buy small position initially, just to get your skin in the game. Because for me personally, I like to start following a stock because just because I already have them. It's more interesting for me to follow, and then I will be more informed to decide if I want to continue buy them or add to them. And the last one is I tend to be a long-term investor, so buy and hold strategy is for me. But remember, it's buy and hold, but don't forget you want to verify and regularly check where your stock investment are, because you always have to be aware that by following the stock, for example during the quarterly updates, it's always good to see if the reason why you buy them in the first place is still valid, if the growth potential is even better or worse than what they were. So it can give you a better decision if you want to reallocate or you want to add to them. So just to recap, first, build a cash position 5 to 20% of your portfolio size. Have a watch list ready in priority order, buy the dip strategically, and do buy and hold, but also verify the stocks that you have. So I want to share also a couple of shares that I want to add if the correction is going to happen again. But this is not a recommendation. Everybody's situations are different. Everyone has different composition in their portfolio and where they are in their life. So it's virtually impossible to give a good recommendation. And so this is just informational purpose only. Do your own research before you buy shares. The first sector that I think is going to continue to grow further in the future is obviously the green energy and electric vehicle. I like to keep adding to Enphase and Next Era Energy. The last few weeks, the old energy, oil and gas are up also, but just because the demand after the pandemic is over is going to increase. But I always think like 5 to 10 years long-term investment, and I still think the green energy is the way of the future. And EV is obviously going to grow even further. Tesla is obviously the leader, and I will add slowly to my position. I also have XPeng and NIO just to have some exposure to China, because arguably China is the largest EV market in the world. The second one is e-commerce related stock. This has been accelerated and they have grown a lot during the pandemic, but I think it's here to stay even after the pandemic is over. So I plan to add more to Etsy, C Limited, Mercado Libre, and Pinterest. And the last one is semiconductor. As you know, chips are required in multiple industry, automotive, computer gaming, and computer hardware, and so on. And there is shortage. If you follow the news recently, a couple of automotive company stopped their production line because there's shortage of chips. There's going to be more and more demand with the limited supply, so I intend to keep my positions on AMD, Nvidia, and Taiwan Semiconductor. So that's all from me. If you have a different opinion on different things that you could do to prepare, or different stocks that are good to buy during market correction, please share down on the comment below. Bye.